Connect then with Kunj Bansal as well, who's right here with us in our studios. And Kunj, to begin with, let's talk about the massive crash that we witnessed on the Lal Street yesterday. And clearly, it's the bears that are in control. I'm going to extend Abha's question to you. The budgetary tax on foreign investors, that really seemed to have angered a lot of market players. We need some sort of a clarification as well on that front, you think?
Yeah, so I think you have woven in 3-4 questions together in this. One, what is there to get worried? Till before the budget, we all were saying that the fundamentals are not supporting, earnings growth is not there, macroeconomic support is not there, but market is continuing to go up. Market was almost at the life high. So at least that rationalization is probably happening, that now with the correction of the market seems to be, depends how further it goes and which way it goes. But at least temporarily it seems to be falling in line with the weaker fundamentals. So that is one. Two, yes, this whole issue of extra tax, the surcharge, that seems to have been put on FPIs, and there are two contradictory views. Finance Minister has said that there is no need for clarification, whereas CBDT chief has said that yes, government is looking into it. So there indeed is needed a clarification as to what will be the taxation. Point 3 is that if you were expecting a 15% or whatever X number return from the Indian market, you meaning anybody, domestic investors, global investors, now that you will have to pay that extra tax, assuming there is no clarification, or the clarification is that yes, indeed the surcharge will be there, your return from the Indian market will come down to that extent. So let's say for simplicity of calculation, that 10% extra means 15% return will fall down to 13.5%. And as a result, valuation would obviously adjust to that level. So that is very simplistic. But the fourth point is that at least in the short term, that has already built in some negativity sentimentally, will build in more, and as a result we could see some of the FIIs exiting position before taking the whole view, okay, that what is now in the new era of new taxation, their return expectation from the Indian market, and as a result whatever the reallocation that they want to do.
Right, I just wanted to highlight two stocks as well, and let's start with the first one. Bajaj Finserv, of course, is a stock that is in focus. It was down 10% yesterday. Remember, it's a big stock. It's a big stock with big holdings, big market cap, FII to DII. Everyone owns it. It's the fifth day as far as the history of this fall is concerned. Fifth worst day, I mean. Declined almost the most in the last 9 years. You look at the market cap, 1,20,000 odd crores, price to book value of 5 times now, but still the 1 year change after that 10% fall is about 24%. In terms of valuations, 5.1 time price to book, and when you look at the average of the last 5 years, it's about 3.5 times. Kunj, any view on the Bajaj twins, the way they fell yesterday?
So the story of returns from the Bajaj twins, one of course has been of the excellent fundamentals. You can't deny that fact. In fact, I'm jumping the answer, I'll come back to that, but in my view the yesterday's fall, besides among so many other things, is the unfavorable treatment that government has given to low quality NBFCs by saying that they will bear that 6 months guaranteed loss or something. So what is happening is the quality players, and that's one of the reasons that the stock continued to outperform, because in Bajaj Finance and few other NBFCs compared to a lot of other NBFCs, there was no problem of liquidity that was seen. The growth was continuing. In fact, they were the ones who were able to capture market share because the other NBFCs withdrew. Now that is the other reason why this stock performed, besides the continued quality. Now, one of the reasons, of course, is, and the third point is that obviously as a result, these are the stocks which attracted maximum institutional interest besides non-institutional interest also. And that is why on the day of the fall, it is quite obvious that such high valued stocks will fall first. Number one. Number two, institutional holding being high. If institutionals are sellers, they'll sell more. But as I said, more importantly, in my view, this preferential treatment that has now been given to low quality NBFCs, maybe from the economic standpoint, that was needed, that government indeed needed to give some push to the economy, to the NBFC, because of the whole liquidity crisis. But the issue of the man getting separated from the boys, which was happening and which was favoring the good performing NBFCs like Bajaj, now they are at a disadvantage. That now the low quality companies will get that benefit from the government support.
Time to separate the boys from the men within the NBFC space. Kunal, I can't help but get in your view, fifth worst day in history for Bajaj Finserv?
So absolutely, but whether this is a sign of a strong reversal of the stock, which has been doing pretty well for the last 10 years, I think that's a bit of a doubt, because I was looking at the last 3 years or 4 years of chart patterns. There have been periods of correction of 25-30% for Bajaj Finance, Bajaj Finserv as well. And after all these corrections, it's acted more like a mean reversion process. So yes, the start of the correction has been with a bang, and I think that probably surprises a lot of investors and short-term traders. But whether this is just a normal correction and whether this is the first time the stock has corrected, I don't think so. That the stock has already gone through periods of 25-30% correction last so many years, and I think this could just be sort of a similar correction. So rather than getting more fearful at these levels, wait for a similar sort of a correction. Maybe the stock drops down another 10%, say over the next 3 to 4 weeks. Then I believe maybe starting to buy the stock at lower levels could be a good opportunity.
Okay, fair enough. As of now, this doesn't really indicate any sort of a change in the trend, according to Kunal, and another 10% would be lucrative to even look at entering. But let's also highlight, as you walk into trade this morning, which are going to be the top 5 stocks to keep on your radar. Well, first up, it's going to be without a doubt TCS. We're watching out for their numbers, wage costs, the forex headwinds that could hurt the Q1 earnings. Keep an eye out on this candidate. Meantime, Titan as well has sent out warning signals from a lot of brokerages with the high gold prices, the low demand, and this could potentially hurt the Q1 earnings. Keep an eye out on BEML. Last evening, the news came out that the government plans to transfer the management control. Meantime, on the radar is Mindtree, as the former CTS executives are in the race for the top job in Mindtree. It's quite a tough one there, according to Economic Times reports, and that's going to keep the stock abuzz. And watch out for Hero Moto as well, as they've raised the two-wheeler prices by nearly 1% from the 1st of July. So those are your top 5 stocks to watch out for in trade. Let's get straight to those mid-cap recommendations as well from our chartists then on Trade Corner. And gonna start off with you then, Kunal. What is catching your eye given the fact that we've seen an absolute hefty sell-off?
So yeah, I think the correction has been very sharp yesterday, but a couple of stocks which were continuing to show signs of weakness. Tire stocks we discussed yesterday, Apollo Tyres as a sell. And I believe that the stock looks absolutely weak in terms of the short-term trading patterns, both in terms of prices, indicators. The stock came back to almost hitting its previous support levels of 185, 188 range, and the volumes are also on the slight higher side for the stock price. So I would continue to remain short or suggest a short on Apollo Tyres even at current levels with a revised target of 182 and stop loss at 193.
All right. What about you, Manas? What's on your radar?
One in mid-cap, I would like to go with the PVR because I think last month the stock made an evening sharp pattern on the monthly chart. Stock has been making lower tops and lower bottoms from the level of around 1800. We saw some pullback just few days back, but the stock could not sustain above 100-day moving average. And looking at the pattern, I believe that soon it can break its 200-day moving average also, and it can go down and test 1540. So take a short call here. A stop loss should be around 1660.
All right, and finally, Dr. Narayan, good morning. Let's get in your quick market outlook as well as your mid-cap call.
Good morning, and the market was, clearly clobbered yesterday, and SGX today morning is not really indicating any kind of significant recovery from that. So therefore, one must expect that the drop might probably continue or some softness to prevail in the morning. Now we have 2 levels of supports nearby for the Nifty, as it were. One is right at hand at where it is trading right now on the SGX, somewhere around 11,540 area, 540, 550 zone is the support, and it did take support near that zone yesterday towards the closing session. But if this were to give way, then we do not have meaningful support till we reach the end of the gap area which had been created back in May. So that's about 11,420.25. So that's a fairly wide chasm for the market to cover, and it could be a little bit worrisome for those who are holding long position. So the bulls have their job cut out for them, and they need to show a lot of spunk here to take the market out of the grips of the bears. Let's see what awaits us ahead. For the mid-cap idea, I'm picking on something which got listed very recently. India Mart is the stock I'm picking. Stock debuted very well post the IPO. There has been consistent buying post listing, which is unusual considering that the market has not been very supportive for advances, particularly in mid-cap area. Typically, I have found that when the listing day high is crossed, and the prices continue to trade above that, then generally that's a signal that there is a lot of new or continued appetite for the stock, and those who did not get the allotment in the IPO are the ones who are buying it. India Mart seems to be in that situation right now, would be a buyer at the current level with a stop placed about 20 points lower and a target at about 1400 plus.
Okay, interesting there, recommending a recent listing, India Mart. That's the word coming in from Dr. Narayan. But today,